So if you've been anywhere near the UK property market in the last, 5 years, you know the vibe.
Oh, absolutely.
It was a total pressure cooker. You'd have, 50 tenants fighting over a single damp basement flat.
Phone lines just jamming the second a listing went live. It was a market defined by scarcity.
Exactly. A sense of panic. But then I saw the data from January 2026, and I honestly thought there was a typo in the spreadsheet.
It's a massive shift.
The script hasn't just flipped, it's like been shredded. Rental demand has dropped to its lowest level in 7 years.
Which is why we're calling this the Great Rental Rebalance. And the mission for this deep dive is to figure out why the market has so suddenly lost all that momentum.
And is this just a blip or, a fundamental change?
That's a big question.
Okay, so let's start with what this actually looks like on the ground. The numbers from Zoopla are just wild.
They really are.
In January 2026, estate agents received an average of only 5.8 inquiries per rental listing.
Which is incredibly low.
Right. I mean, a couple of years ago, your inbox would just explode. Now, agents are sort of waiting by the phone. Overall inquiries are down 20% year on year.
And it's not just Zoopla. The Royal Institution of Chartered Surveyors, RICS, their data showed a reading of -27 for tenant demand in December.
And what does that mean in plain English? Not surveyor speak.
It basically means way more agents are seeing demand tank than are seeing it go up. It's a net negative sentiment we just haven't seen since the very early days of the pandemic.
The frenzy has just evaporated.
Completely.
So if the queue outside the open houses disappeared, where did all the people go?
Well, not back to their parents this time. What's so fascinating here is that the demand seems to be draining from the top of the tenant pool.
The top.
We're seeing what you could call a richer renter exodus.
So the people who have the most cash are just leaving the rental market entirely.
Finally, yes. For years, these were the people stuck renting because house prices were just running away from them. But look at the last 12 months.
Wages are rising faster than house prices.
Significantly faster. Rentings up 4.7% in January, while house prices only nudged up about 1%.
And it's not just wages, is it? The hurdles to getting a mortgage have also been lowered a bit?
A lot more than a bit. Mortgage rates eased, but the big one was those affordability stress tests.
Oh, right. The ones where you had to prove you could afford the mortgage, even if rates hit some apocalyptic number like 8 or 9%.
Those exact ones.
Yeah.
The FCA loosened those rules, and suddenly the math works for people.
Ah.
Nationwide data showed that by late 2025, the house price-to-earnings ratio for first-time buyers actually fell below the long-term average.
So those rich renters, they've graduated. They're buying homes.
They've bought homes. They're out of the rental queue.
Okay, that makes sense. You take the people with the most money out of the line and competition cools. But isn't the UK rental market usually a conveyor belt?
Usually, yes.
Even if locals move out to buy, there are thousands of new people arriving to take their spot.
And that's the other half of the story. That conveyor belt has slowed down dramatically. Net migration has fallen off a cliff.
How much are we talking?
It dropped 69%, down to 204,000 in the year ending June 2025.
Wow. That is a huge drop. And I guess rentals are always the first stop for anyone arriving in the country.
Almost exclusively. You don't buy a house on day one, you rent. So
Yeah.
when migration slows, London and the big university cities feel that vacuum immediately.
So it's not that we suddenly built a million new homes?
No, it's that the queue just got shorter from both ends. The top end is leaving to buy, and fewer people are joining the back of the line.
So hearing all this, I mean, is it time to pop the champagne? Demand is down, people are buying homes. Is the rental crisis solved?
I really, really wish I could say yes. But this is the twist in the story.
Oh.
The market might feel calmer, but it isn't healthy. Because while demand cooled, landlords are heading for the exits in droves.
So the supply crisis is back, just in a different form.
Exactly. RICS data shows new landlord instructions at -39 in December. That's 5 months in a row below -30. Landlords are just saying, I'm out, sell the place.
And why now? What's spooking them?
It's largely policy. The Renters' Rights Act is looming. The end of no-fault evictions, strict limits on rent hikes. It's just made a lot of investors very nervous about their control over the property.
So rent growth has slowed to about 4%, which is slower than wages, but the market itself is just fragile.
Incredibly fragile. We have shrinking demand, yes, but we also have shrinking supply.
That sounds precarious. Like we've reached a kind of equilibrium, but only by making the entire market smaller.
We've balanced the equation by shrinking both sides.
Which leaves us with a pretty worrying thought to chew on. Right now, things feel okay because the pressure valve has been released, but we've burned our buffer. There's no surplus of empty homes waiting.
Not at all.
So if we get a sudden shock to demand next year, say migration spikes or mortgage rates jump up and trap renters again, is there actually enough rental stock left to handle it?
That is the big risk. We might have just set the stage for an even harder crunch down the road.
Something to keep a very close eye on. Thanks for unpacking all that with us today. We'll catch you on the next deep dive.